Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily SPY report for Tuesday, November 30th, 2021. Before I jump into the charts, just want to encourage you to click like. Clicking like on this video helps me a great deal with regard to YouTube presence, and certainly click subscribe. If you haven't subscribed yet to the Wicked Stocks YouTube channel, you should do so. It will provide you notifications each and every time we load new content. The Daily SPY report comes out every day, as you might imagine, by around 6 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. So become a Wicked Stocks YouTube subscriber by clicking subscribe. Let's jump into the charts. Nice recovery yesterday following the significant sell-off on Friday. We did push through that 465.46, very simple channel bottom, but we didn't close above it. We spent even an appreciable amount of time above it. Several hours we traded above it in a very narrow range, but that we came falling back in the afternoon and closed below it. There's no way for me to see this, but still the market, near term, that is to say, this week and into the middle part of December remains susceptible to falling south. Falling south to that 454.05 September high. Now, I know I've got Fibonacci retracement levels in there, so forth and so on. They've all been sort of reduced to minor support levels only. I'll get to the support and resistance in just a moment, but just know that I still think that we could this week, possibly over the next few days, 3 to 5 days, fall back to 454.05. And given the fact that we've tested long-term resistance in the upper 470s now, and I'll show that in a moment, over the last few weeks, I still hold to the possibility of falling south by the end of December to that 441.01 channel bottom. And so, having closed last Friday clearly below the 465.46 formation, we rallied back. We certainly tested it on Monday. We even pushed through it. But continued daily settlements at or below that formation, I think, should, over the next few days, result in this market falling back to 454.05 this week, and once again 441.01 over the next few weeks. Downside today, let's take a look at the support and resistance. And you can see I've got the 465.46 level able to contain buying into next week. And as I say in this text, below which 454.05 in reach over the next 3 to 5 days, the 441.01 formation over the next 3 to 5 weeks or so. Downside today, 461.73 is in reach, and it can contain intraday selling, initial selling. It is actually really just yesterday's, that is to say, Monday's low. If we break Monday's low, I do think 458.97 is in reach today, where we can place a daily low. And 458.97 is nothing more than the settlement price last Friday. So that's the lowest this market has settled in several weeks. And I think given our distance from it, if we were to fall today, breaking that 461.73 level, 458.97 in reach, where we can place a daily low. And under that scenario, unless we bounce nicely off of that level, I think we'll probably then tomorrow test 454.05, where we can bottom out through the balance of the week. That is a level that is a kind of a 2-star level, as you can see at the bottom of the support and resistance. That, for me, 2-star levels, 2 to 3 day lows, essentially. And so if we do test that 454.05 September high this week, it can contain selling pressures through the rest of the week. But that's about it. I really think that holding below 465.46, this market can grow weak once again, and by the end of December or sooner, fall off to 441.01. So just know that if we were to close below 454.05, highly unlikely today, but if later in the week we do, we should then, by the end of next week, actually reach that 441.01 channel structure, where we could bottom out through December trade into January, and following a test of that, rotate upward and onward to new highs within a matter of a month or two at the most. Let's talk upside today, that if we happen to do push above or open above 465.46, we have 467.18 as an early target, an intraday target. We could top out there for a better part of the day, perhaps, but I do think that if we push through 467.18, we could get follow-through buying that just might reach 471.20 by the end of the day. 471.20, nothing more than this intermediate channel structure that can contain daily buying pressures. But just know that if we do close today above 465.46, that essentially shrugs off, last Friday's sell signal, which still technically remains intact despite what played out on Monday. So holding below 465.46, as I say, maintains the possibility for continued heaviness as we move into December. But if we close above 465.46, then I think that by the end of next week, we should reapproach that 478.22 long-term resistance, which I'll reacquaint you with. That is the long-term trend line that goes back about a year and a half now. It's performed pretty well in containing buying pressures over the last few months. Certainly the September highs, we tested it a couple of times, and then most recently over the last few weeks or so, we've rallied to within 1% of it a couple of times. And as far as I'm concerned with regard to long-term resistance or support levels, as you approach the 1% mark, you are essentially then in the process of testing that area. So I think that if we close above that 465.46 channel bottom, 478.22 in reach then by the end of next week, where once again we can top out through December, and below which the market remains susceptible, prone to falling back to 441.01, I'd say by the end of December or into January. And in fact, that is sort of quote-unquote confirmed, if you will, with continued daily settlements below the 465.46 channel bottom, which you can see here. But I'll leave you with this. If over the next couple of weeks we happen to muster a settlement above the 478.22 long-term trend line, and I would want to see that by a 1% margin as well. So if it were today, I'd say it would need to be 4.78 above 478.22. And if that were to occur, then I see just the opposite, longer-term bullish continuation. The following 3 to 5 months or so could take a little longer, but I think realistically 3 to 5 months we would then continue on to that 527.06 long-term channel top, where we could top out at least on a quarterly, possibly annual basis. I'm going to leave you with the support and resistance levels here for today. You can print them off your smartphone or your desktop, whatever the case may be. Once again, please click like and subscribe. They both help me out a great deal. I hope you're enjoying the series. I will be back tomorrow for another edition of the Daily SPY Report for Wednesday, December 1st. You have a great evening.